Okay, Pankaj Pandey, Head of Research at ICICIdirect.com, also now live with us, and this is Tuesday's edition of the show. Good morning. Well, it is a good morning, but however, a lot of the cues that we're getting, not so good. Whether you look at the dollar index, the way it is strengthening, can it impact flows? The earnings season behind us, but the rest of the globe so worried about the news you're getting from China. You saw a surprise rate cut there. Clearly, China trying to, give a fillip to the economy. U.S. Fed, let's see what's happened. The Jackson Hole Symposium. So very quickly, first, the call on the index. It's expiry week. It's a week where we're talking about consolidation. And did the markets get overheated, move up too fast?
So short term, we do expect consolidation to sort of pan out since we have already hit 18,000 kind of a psychological levels. Probably 17,200 is what we are looking at. But fundamentally, our sense is that while there has been about 14% kind of a quarter-on-quarter cut in Nifty EPS, but over the next 2-3 quarters and subsequently, our sense is that the margin pressure will sort of erode. And so from that perspective, overall Nifty EPS estimates are largely intact. It's only about a downtick of over 2%. And in the second half, we'll be sort of looking to introduce even the FY25 numbers. So from that perspective, our sense is that Nifty is looking good to us with a target price of 19,425, which is a 12-month target on a rolling basis.
Pankaj, hi there. Morning. Today you had JP Morgan downgrading the entire IT basket, talking about the risk of margin erosion on the structural side, valuations as well being higher than the long-term averages. What's the outlook in terms of the entire IT space? Do you believe that at the current levels, with the fall in the markets right now, it's not a good buy at the current price?
In fact, our sense is that IT has seen a sort of a earnings cut of about 2%, and our sense is that there are a number of levers which can sort of help IT to sort of deliver more. One is companies have been looking to sort of increase pricing in selective cases. Then there could be a moderation in the subcontracting cost, and I think companies are also sort of looking to sort of defer variable pay hike the way Infosys news has sort of come out. And our sense is that IT is offering one of the best risk reward in the current weakness. And if there is a further weakness in the IT stock, either because of the near-term margin pressure or because of the FI sort of selling spree, then I think IT offers the relatively lot more better risk reward compared to other sectors where the valuations have sort of inched up. So from that perspective, I think IT being a capital efficient sector looks good to us if there is a further weakness, and our stock preference would be Infosys, TCS, Coforge, Mindtree, and Persistent.
Right. Just looking at a couple of other spaces, though, Sun TV, of course, was a big winner yesterday, as was the FMCG pack. Pankaj, just wanted to understand if the market were to fall further, and sure enough, there is a lot of nervousness around, the Jackson Hole Symposium as well later tonight. Which spaces do you think will be more resilient to the pain that we are likely to see?
So I think auto is one sector which is sort of clearly looking a lot more better, will be a beneficiary of the correction in the input prices, what we have seen. And this is one sector which has seen the highest positive revision in the overall Nifty stocks. So from that perspective, auto is one sector which is sort of looking extremely attractive to us. Key names like Mahindra and Mahindra, iShares, I think are top picks there. I think besides that, banking and financial services, any kind of a correction overall should help or will offer better risk reward. We've seen a decent amount of run up, but our sense is that there's enough juice left behind even in BFSI going forward. Given the fact that credit growth has been sort of picking up, there are no major concerns on the asset quality front. So I think that is another sector which is looking good to us.
Okay, that's a quick word that's coming in as far as that sector goes. Naresh, I'm going to come to you. So, while we talked about yesterday not being able to defend 17,500, the way the Sensex also closed sharply lower, there were stocks, right, which saw big moves. Look at a Suzlon. Usually that's always very surprising when you see a Suzlon move. You can look at a Solara. You can look at a CCL, a Sequent. We saw big moves there. I'm talking about 7 to 11%. How should one look at this?
So these are stocks which have corrected quite a lot. and have gone nowhere for quite some time. So we've also seen a Reliance Infra move up as well as a Reliance Power, but we don't talk about those names. So Suzlon, for example, is at 8-9 rupees. The stock was at 8-9 rupees back in 2019, back in 2020, 21, all the time. In between, just a few months back, it was also at 12-13 levels. So nothing consequential here. Solara, for example, the stock moved up in the last few days from 400 to say 460, 480 levels. But the stock has fallen from a high of 1800, 1900 levels. So such a huge correction and then a bounce back would be pretty normal, just a case. So if one, so I call them fallen angels, and those if I to something which comes up on my technical radar is a Reliance Infra, because at least this stock has crossed a 6-month high and is very close to a new 52-week high, unlike the other names. So the only one I would look out in this names of companies which have gone through a terrible correction wherein they've fallen 70, 80, 90% from the top. The only one in the screener which comes closer to a 52-week high is Reliance Infra.
Right. Okay, the SGX Nifty indicating a weak start for us, and it seems like today is going to be a test of whether or not we're going to hold on to that 17,400 print or not. Naresh, just want to revisit, your Nifty levels and Nifty Bank as well, because clearly led by Kotak Bank yesterday, like we saw, banks are turning out to be a weak link. It's a large weightage sector in any case. So both for the Nifty and for the Nifty Bank, what support levels are you now working with?
So if you look at Nifty 50, the last cluster of supports was around that 17,150-200 mark, which is very clear because there were 4 days where we made bottoms around those areas. And the previous, say, a resistance which was there is 17,400, which was a interim swing high on the way down from that 18,000 mark to 15,200. The case here is because we've gone up 2,800 points from the lows, a support would be a little difficult to point out because there was hardly any correction in the whole move. We did not see more than a 5-7% correction in the whole move in this move. So out here, I would be watching out for 17,400 for the day. And overall, a good risk reward comes buying closer to 17,200. Now, same if you look at Nifty Bank, it was an outperformer clearly because Nifty Bank crossed the highs of April as well as came very close to or crossed the highs by a little margin for even February. So it was a very strong move in this sector. Now, out here also a similar price point equivalent to 17,150 comes closer to 37,300 to 500 band. Which is where the risk reward comes out to be strong. And the other support is closer to that 37,900, 38,000 mark. So for the day, if I'm looking out for a bounce, we'll buy closer to 38,000, 37,900 and closer to 17,400 for the Nifty. But overall, if I have to take a positional bet wherein one could ride on to the trend, I would be closer to 17,200, 37,300, 500. The only difference I have in the view is we are no more correcting similar to what we did in February and March, wherein we fell 15% from the top. I don't think so. We'll get into a range over the next 2 days. Will form a base.
After yesterday's price action, is Kotak Bank looking like the weakest link in the near term within banks?
Not really the weakest link, but then I think the stock has gotten back into a reality check for the news and the anticipation which was built up on the FTSE rebalancing. I think that has now played out for Kotak Bank, and the stock is back around that 1800 mark. In fact, yesterday the stock did not break that 1800 level, and I think if I'm not wrong, in the fag end of the session, the stock made an intraday high back again, closing around that 1830 odd mark for itself. So which means that the stock would probably get back into a zone of mediocre kind of returns, where the stock may probably underperform the benchmark indices, but then 1800 could be a pivot support for the stock over the near term. So if the Bank Nifty breaks down significantly, then of course Kotak Bank would break below that 1800 mark. But if there's an at par performance, then I think 1800 level should be a good support for the stock over the very near term.
All right, let's get a move on and focus in on those gas prices. Given the fact that there has been a rise in Europe as well as in the US on the back of supply fears, how are you going to see Indian importers, the likes of GAIL as well as Petronet LNG, be impacted? Let's take it across then to Samit, who joins in with the detailed explanation. Samit?
Well, if you see, the European gas prices have touched a record high, while the gas prices in US have also at trading at highest level since July 2000. And this is mainly because Nord Stream 1 has gone in, is expected to go into an unscheduled maintenance shutdown for 3 days at the end of this August month. Now, how will it impact the Indian companies? Firstly, it will impact GAIL because higher spot gas prices could lead to a limited usage of gas in the Indian market, which will not only impact its gas imports but also its gas transmission business. Along with this, the GAIL also imports gas from US, and the prices of this gas that it imports from US is linked to Henry Hub, and which is trading at a 14-year high. And because of this, the gas sourcing cost for GAIL is also expected to go up going forward. Now, for Petronet, LNG is one of the largest gas importers in India, and it also has a large amount of income coming in from regasification service, and limited gas usage in the country could impact both these segments for Petronet LNG. Now, for city gas distribution companies, there is no direct or a big impact as of now because they are just using 6% of the gas, 6% of the total requirement using the spot market. So the blended cost would not go up largely at this moment, but if you see continuously, the spot gas prices have been increasing, so the blended gas cost is still going up. So this could marginally impact the city gas distribution companies. Now, one would easily think that rising gas prices would be beneficial for ONGC and Oil India, but that is not the case in India because in India, gas prices are administered and fixed by the government twice a year. And however, the market is expecting that from the 1st of October, that is when the next revision in gas prices is expected to happen, the government is expected to cap the gas prices. Hence, largely the impact of higher gas prices would be neutral for ONGC and Oil India.
Okay, thanks a lot, Samis, for joining in with that. So keep a watch for those oil and gas stocks. While we're talking about oil and gas, the big global news was, Saudi Arabia saying maybe it could look to cut output just the way the prices have been moving. So in fact, you saw the crude oil market very, very volatile in trade. Well, back home, stock-specific ideas, money-making ideas for all of you. Here's Neeraj Devan, and here's why he's betting on Supreme Petrol.
They're even entering into a new product, which is ABS, which is used mostly for, automobile, components, bumper, other enclosures for electrical parts, which is mostly for automobile industry. And they're doing a capex of close to about 350 to 375 crores for this capacity. And the company has a capex plan because they're right now running close to full capacity. So at the current capacity, they can only do a growth of 10 to 12% per annum. But they've expanded capacity since last year. So they did a capex of 280 crores last year, and they're doing another capex this year and followed up till 2025. So total capex would be close to 1,250, 1,300 crores. And the company is cash rich, which has a cash, about 400 odd crores of cash on their book. So all the capex that they're doing will be mostly from internal accruals. And there's a very small working capital debt of, I think, 30, 40 crores, and it will not go up considerably. So the strong growth and this new capex which is going to come in will result in good, top line growth going ahead. And margin should remain steady because Tranix is one, product which the price depends, though it is crude derivative, the price depends more on demand and supply. And if there's a good demand coming in, then the prices go up. But then it's pass through which happens in 2 to 3 months period. So right now the prices are also stable and the margins are stable. So even if we give it about 18 times 1 year forward, we get a target of close to 1,300 rupees, which is a good 60% up from these levels. So I think for a long-term investor, it's a good stock to invest in.
couple of other stocks which are going to be in focus, and GAIL and Petronet LNG, like we were highlighting earlier, gas prices in Europe as well as US, remember, are at record levels, and that is surely going to impact gas importers. So look out for what these stocks will do in trade. Also, Gland Pharma, Goldman has initiated coverage with a buy. They see a 27% top-line growth in FY24 for Gland Pharma, and they say that EBITDA margins are going to remain stable for Gland in the times to come. But Naresh, you're not pretty gung-ho on what pharma can do from here, right? Okay, I'll take that question to you, Kunal.
So yeah, not too much of gung-ho on the pharma stocks. I think as it is, they were struggling over the last 2 months, and even the last couple of days, you just had, I think, 2 pharma names which had given signs of breakout. One was, I think, Sun Pharma, which had managed to come back about that 900 level, and Cipla also showed signs of coming out of a 12-13-month consolidation. But then both these, breakouts have gone dud, and these stocks have come back into their trading range for themselves. So again, indicates that even the best of the stocks or the leaders, or so-called leaders within the price performers in the pharma pack, even these stocks have not been able to charge up ahead and lead the breakout for themselves. So that itself indicates that the sector would struggle at large. So would not be too much enthused into buying the pharma stocks, at least as of now.
Kunal, the chart check I wanted to do with you, outside of the equity markets, but it's going to have such a big impact as it impacts flows, is that of the dollar index. So ahead of the Jackson Hole Symposium, look at the way the dollar index is gaining strength. We saw the parity with the euro also being lost temporarily. Chart check on the dollar index.
So I think a couple of days back also we were discussing this on Chartbusters. And I was mentioning that there's been a cyclical breakout for dollar index back again. So it's the 5th straight trading session for dollar index where it's gained from, I think 104.5 was the previous swing low. The dollar index had hit almost a week and a half out back, and now it's almost at 108 plus. 109 is where the dollar index is. 109.2 is the previous high for dollar index. So we are now inching towards a breakout. I sense that the breakout should happen for dollar index, and it should even cross that 110 plus levels as well. That could probably be also one of the reasons why the markets are suddenly factoring in that there is some sort of a risk which is playing out back again for the overall equity market. So I would be of the belief that this could be a more of a steady rise for dollar index. Breaking past about 110 is a high probability for the asset class as of now.
Okay, meantime, let's also get in a view, Pankaj, as to what the outlook is when it comes to the entire media space. In particular, we've seen Sun TV, which has been outperforming. There's also been Zee Entertainment that has been active, but some, market veterans are advising that that's just a pure trading play. What's the outlook when it comes to some of the key triggers for these broadcast names?
In the media space, we like Zee Entertainment with a target price of 300. Our sense is that while the numbers were soft last quarter, but second half is where you'll see a lot of festivities and relatively lot more higher spending by especially FMCG companies, which are the key spenders. So from that perspective, we expect advertisement revenues to sort of recover. And I think Zee Entertainment from that perspective looks attractive to us. Sun TV, we have been skeptical in terms of overall, so that is not something which I would recommend, despite the fact that it is trading at quite an attractive valuation. So I think in media, Zee Entertainment relatively is looking a lot more better.
Right, that's the view coming in on the entire media space. In fact, Pankaj, wanted to also get in your outlook as well as to what the outlook, what the sense is when it comes to the entire earnings season, particularly when it comes to some of the auto companies. Do you believe that a lot of the pain is now behind us, or issues like semiconductor shortages, etc., will continue to plague the auto industry?
Well, verdict is very not clear in terms of how the semiconductor shortage will play out. But when we sort of look at companies overall, we have seen good amount of upgrades, even within the companies which are part of Nifty on the auto side. We've seen about 12% kind of an upgrade. And our sense is that when we sort of look at a company like Mahindra & Mahindra, we are expecting about 22% kind of a volume growth. Similarly, for Eicher Motors, we are expecting about similar kind of a volume growth. We like the ancillary space also, something like, say, Mahindra CI, which is sort of doing decent amount of capex domestically, while the Europe business does not move much. Our sense is that there is another company which should sort of do well, given the fact that the domestic margins are good. Similarly, we like, say, Philips Carbon Black, which reported one of the highest EBITDA per ton in their history. So that is another auto play. So we like a host of names in the entire auto. And I think auto overall, except for two-wheeler as a segment where the growth is expected to be in single digits, I think the PV and the CV is expected to comfortably deliver double-digit growth over the next 2 years. So I think that is the segment what one can look at. I think two-wheelers is something which is still not sort of clear in terms of how the growth would sort of pan out. But within that, we have been liking Eicher Motor a lot, given the fact that our sense is that with the launch of Hunter, their volumes will sort of definitely get better. And that is why our sense is that despite trading at about, say, closer to 30 times kind of a multiple, we still feel that it has a lot more room to sort of deliver.
Right, let's get you some news and updates as well outside of the equity markets. America's top infectious disease expert and chief medical advisor to the president, Joe Biden, Anthony Fauci, has announced that he will now be stepping down in December. Remember, he became the face of America's fight against the pandemic. He previously disclosed plans to leave by the end of Biden's current term. Ford Motor has said that it will be cutting a total of 3,000 salaried and contract jobs, mostly in North America as well as in India. The company is restructuring to catch up with rival Tesla in the race to develop software-driven electric vehicles.
And Tesla CEO Elon Musk has served former Twitter boss Jack Dorsey with a subpoena in an attempt to weasel out from the Twitter buyout deal. The legal order asks Dorsey to give Musk any information on how Twitter calculates the number of its active users. Also, the Supreme Court back home will be resuming its hearing about the freebies case. Earlier, the top court had adjourned the hearing of a plea against promises by political parties to distribute freebies from public funds during election campaigns.
And heavy monsoon rains continue to batter Orissa. Several northern districts, including Balasore, are facing several problems as far as the floods go. People in at least 134 villages are marooned due to rising rivers overflowing the low-lying areas. Okay, so that's some of the news you need to keep in mind outside of the stock markets. The big story today that's going to be dictated the cues for us domestically will be the big interview with the RBI Governor Shaktikanta Das. That will, of course, be at 11 a.m. But till then, we're going to continue getting you all money-making ideas. Now, the consolidation in the markets was also, of course, expected. And, one stock, Kunal, that sees so much resilience, however, and if you scan the list of the 52-week high stocks, ITC, it's once again featured in there.
So I think it doesn't come as a surprise to me, frankly, that ITC is moving on its own, moving into a very stable uptrend. I think post that breakout of 250, then 280, and then 300 mark, I think the stock has just established that it's getting into a sweet trend for itself altogether, devoid of what happens across the market as well as across the sector as such. So I think that's a very strong signal which has changed for ITC. The more important and a pertinent point when we look at it from a trading aspect as well, that there's been a drastic change of behavior for ITC in terms of the option writers. At a point when the stock was struggling below the 300 mark, there were a lot of call writers which were present for the stock around the 300 levels. Once that levels have been breached, the behavior has changed significantly for ITC in terms of option writers, and now you have a lot many put writers at 300 mark, which means from being a resistance around 300 level, now it's acting as a major support. Even in the last 1 or 2 weeks when the stock was trying to break below that 300 mark, it somehow managed to bounce back from those 300, 302 levels for itself. So that indicates that there's been a good support for ITC at this 300 level. Till the time the stock holds above those levels, you can probably expect the stock to get into a steady uptrend. So you may not see immediate fireworks, but then from a 1 month, 3 month time frame, I would expect the stock to head towards 340, 350, which is the all-time high.
Okay. Well, it's been quite a bit of crack that you've seen for global markets ahead of the Jackson Hole Symposium later tonight. So yes, the handover from the globe has been weak, and I'm just looking at what Asia markets are up to. Everything from Korea to Australia to Hong Kong, China. China, in fact, has fallen a lot less. In Japan, which is taking a knock of over 300 points right now. Seems like Europe too could be headed in for a weak start. The only thing is that the US futures right now, although although it may be too early, they are indicating just a little bit of a rebound after the kind of fall that US equity markets have had overnight. But yeah, suffice to say that we too are going to start off weak. That is what the trade setup for this morning is looking like. And yesterday, mind you, it was a negligible figure, but a sell from both FIIs as well as DIIs. The SGX Nifty on the brink of that 17,400 mark. Kunal, let's revisit your Nifty strategy. What if we breach 17,400? What happens next? What are the support levels? What are the indicators?
So 17,500 was the first support. We've broken that. And now below that, I think the next support is 17,250. So look at it this way. On the way up, when the indices were moving from 15,200 to 17,900, 950 plus on the index, there were 3 pit stops in between. 16,700 was where we spent almost like a couple of weeks, then 17,250 and then 17,500. These were the 3 important points where the markets took a lot of resistance and then a pause for themselves. So on the way down as well, these 3 levels would probably get reactivated because most of the traders who have managed to initiate a fresh buy on the indices at those levels, their average price would land up somewhere between this range. So 17,250 is now the next important support. I think below 17,500 mark, that's where I believe the indices should be heading towards.
Pankaj Pandey, if I can come to you, this is expiry week. A lot was being said that, we will see consolidation, and that is what has happened, right? And we did see a sell-off. Now, if you were to scan the list of the 52-week low, the one that made the new 52-week lows, you're seeing the likes of Metropolis, Biocon, Sanofi. So there is a theme, right? And it seems to be healthcare. What is your approach here? Because this seems to be a mix of diagnostics as well as pharmaceutical companies.
In healthcare, you have various companies doing various kinds of things. So, for example, Sanofi, again, when you sort of strip out the high base effect, also the growth was quite slow. So that is sort of impacting. Lupin, you really do not see too much of a visibility for better set of numbers. And they're sort of looking to sort of scale up the diagnostic business. Diagnostic in general is sort of competing too much on the prices, and which is why one needs to be very selective in the pharma or the healthcare as an overall space. See, what we like is something like Laurus Labs. So, for example, it has grown 20%, likely to maintain that kind of a growth. 39% is coming from CRAMS, which is a sort of a stable business. Similarly, Sun Pharma, I think the specialty business in the US did quite well. So that is another thing which we have been liking. QRL again has got good number of launches in the US. So that is another thing which we have been looking at. And I think within hospitals, we are seeing better recovery. So Apollo Hospital is another stock which we have been liking despite the correction what we've seen. So one needs to be selective across healthcare as a space because you have the US-based generic companies which are sort of getting impacted, but something like Sun Pharma is sort of doing relatively a lot more better. So it's not a single way or a single approach to looking at stocks in the healthcare as an overall space.
Okay, that's the view coming in on the entire space. In fact, I just want to take a look at some interesting movers over the last 1 week or so. And on the upside, there have been names like Adani Power that make the list. You've also got a Z Entertainment. We flagged that stock off. Thermax has done well. IRCTC sure has been a buzzer, and in the last 1 week or so has gained about 6.5%. Tata Communications and Solara Industries, those are some of the other interesting movers. On the flip side, in the last 1 week, some of those losers include a Varun Beverages. It's declined about 11.5%. There's been a JSW Energy as well that's lost momentum. Sona BLW, that sure has been a newsmaker as well on the fundamental side, and that stock has declined. Tata Elxsi, and you've got something like a Bharat Forge as well that has had a bit of a rough week. Naresh, let's get some chart checks going on the stocks on the downside. What's the view on Tata Elxsi, Apollo Hospitals, Bharat Forge, given the week that we've seen?
So if you look at Tata Elxsi, it has been a one-way performer compared to what has happened in the market. I think it has a lot more to correct, unlike the other names. So Tata Elxsi would be a big avoid. Out here, the stock has moved up very recently from a breakout of 8,600, 8,800 towards almost closer to that 10,700 mark. A retest of 9,000 would be normal, so there is still some more left. Bharat Forge, on the other hand, made a breakout move, and it has been faded off really badly in terms of the last 5 days of correction. It started correcting even before the indices started correcting. So for now, 700 remains an important support. So closer to 700, 705, one could take a little bit of a bounce back trade with a stop loss at 695. So Bharat Forge would be a bounce back trade which I would be watching out, but with a very strict stop loss.
Right. Pankaj Pandey, wondering whether you've got a buy list ready with you or not if the market does fall further. Anything that you would like to recommend to our viewers who are sitting on cash to buy?
So, 4-5 stocks which you have liked post result season, one of them is obviously Bajaj Finance. Our sense is that second half, when the festivities begin, this is one company which should benefit. Then Laurus Lab, I already highlighted the CRAMS is one business which is sort of doing exceptionally well. We like KSB Pumps. Now, this company has been sort of doing well, and we like this company's playing the nuclear opportunity. So that is another company which we have been liking. And then Tata Chemical is another company which we have been liking. Our sense is that the soda ash prices will remain firm. And since Europe probably cannot produce so much, so overall the higher realization or one of the best margins what we've seen in this particular quarter can persist. Then I think Philips Carbon Black is another stock which we've been liking. It's a play on indirect play on the entire auto as a pack. So they reported one of the best margins. I think the worst is behind us. So this is another company which we are liking, and we feel that carbon black market in say a key market like say China might offer even more better opportunities for this company going forward. So I think these are some of the names, but overall, in general, we have been positive on the markets. I think selectively one can look at exposure across sectors depending on stocks.
Okay. Pankaj, it's been great having you on the show. Thanks for being live with us. And, you know, this is also the time of the show where we get top picks from the chartists.